Hello and welcome back to another strategy video. This one's called the Golden Box Strategy. One of the most common tools used for trading is the Fibonacci Retracement tool. It is based upon a complicated mathematical formula that is well known to see repeating patterns in nature. Without delving into the mathematics of the formula, there's plenty of information on that online. Suffice it to say that traders often look for buying opportunities near a 50% pullback of a recent gains or losses, as well as the 61.8% pullback level. The Golden Box strategy uses this phenomenon to its benefit. It uses both levels, forms a box on the chart. To begin with, you need to have some type of impulsive move, and the longer the time frame, the better. We know that over time, traders tend to be attracted to these two levels. So by using that knowledge, we can place orders to get into the market at both the 50% retrace and the 61.8% retrace. This allows us to take advantage of the phenomenon in a set and forget type situation. While this doesn't always work, this puts you on the same side of the overall trend, assuming that you are following it. The strategy does not tend to work in counter trend moves as well, and is much more suited to people who work full time and don't have the ability to sit in front of the charts all day. By its very nature, it tends to favor swing trading. This is the Euro Aussie daily time frame, and as I stretch out the Fibonacci retracement tool, you can see that we found buying pressure right at the 50% Fibonacci retrace. It's a very nice move so far for the buyers. That being the case, it looks like that this would have worked. You would have had an order down here at the 61.8% Fibonacci retracement level that has not been triggered. That's fine. You take your one position and you let it run. In this example, the US dollar Swiss franc, you can see that we not only would have been filled at the 51% or 50% Fibonacci retracement level, but also at the 61.8% Fibonacci retracement level. This allowed the market to go back down to the original 0% retrace, or where we had the swing low, and that would be your target. You would have two positions hitting that, leading to a very nice profit. Now, quite often, we will break even lower, but this swing trade worked out quite nicely over the course of about 2 weeks. You would have gained several hundred pips times 2, so that definitely would have been a nice trade. And as you can see, there forms a little golden box, if you will. Golden ratio, golden box. Golden ratio is what they call 61.8. 50% is used by a lot of traders. You can see that that area does seem to attract a lot of attention. Very simple strategy, good for people who work full time and can't sit in front of the charts.